are you? Everyone doing okay? Yesterday's turnaround Tuesday call was buying the dollar, selling Aussie, selling euro, selling EJ. Pick your poison. I pointed out yesterday that we had this glaring daily divergence here and had this red line, kind of like a speed line or a wedge line drawn, tagged it exactly yesterday. Everyone see this red line? Give me a Y. Okay. Not seeing anything in chat. Hi, Nikita. How are you? You recall it, right? Hey, Sean. All right. So is this it? I don't think so. I think the dollar is set up to squeeze bears now. Hi, Abel. Some old FX people. Okay. So, and the euro was the preferred short. Why? Does anyone know why euro was the preferred short over cable? Something I've been talking about for, I don't know, about a week now. That's right. Sean knows. So EG continues to work lower. There is a little divergence setting up here. So I've gone to the door, even though I think there could be more left to the downside. Really, no reason except for the divergence. Uh, I have exposure in other areas right here. So as long as we're under this 89.40 level on a closing candle, yeah, it was down, Paul. So something that we talked about back here. Um, the only thing that's in my face right now is US dollar yen. I thought we were going to get some type of flag. Still could be. I can't get long the yen, and my conflict was yields and also, risk on continues. We've actually, and I'll get to the S&Ps in a minute. I want to see Blake's megaphone when he comes back, but um, S&Ps, are diverging a little bit here on the 2 hour, but you go the longer time frames, we're over 70 daily, way almost 80. So we could have a pullback, but I'll tell you, top's going to take, I think, um, maybe the majority of the month, or I'm starting to look towards the equinox. Fall starts in, I don't know, about 3 weeks. So there, maybe we have 3 weeks of a distribution, going into that, but we should start getting some more two-way trade here. I don't have the megaphone drawn. I'm wondering if we're throwing over on that megaphone line. We have Nargis with us today. Uh, so, there were some three drives, and, I've told myself, Dale, why don't you just wait for your three drive formations to go? Because, I mean, this was one, right? This was one in the Aussie. I think you see it a little better here. See, one, two, three, and not ideal, and not a huge home run ball, but it worked. And the Euro was a three drive. If you look at it on a 4 hour, and the daily really shows up. So, the mirror image of the dollar up here, I think it was about 15, 20 minutes after face ended that we got this spike candle in Euro. I think it showed up better here, right here. And if you look at the RSI reading, look at that. So if we would have had a positive close, it would have blown it out, but it didn't. Look at that. This new high is here. So that's your 2 hour look. So where to now? Um, this 118 level is pretty important. Okay. I have some stuff here. 118 was pretty important, but I think there's a chance now that we head down towards at least the 116 level. Look at the monthly. Yeah, I'm not sure I have it stayed within it or broke out. I'll take a quick look. You know, it's great to look at long-term charts. Yeah, this could just be one big failing rally. Close above August. Okay, well, here's your 2-month off number. It's 117.79. So, you won't know till the end of September, but that's your off number. So that 118 level is pretty good. I like trend lines, but it's not my number one thing. You know why? Trend lines' destiny is to be broken. And you get, I don't know how many times I've adjusted trend lines. I'd rather rely on things like RSI that give me more clear messages and fibs than channels. Just me. Okay, I draw them mainly when they're wedges. So we're holding right where we have to, but this is a pretty negative action going into the end of the week. And just for a weekly off number, keep this in mind for Friday. We're almost there. We're still lower. This is your 2-week off number. People go, what's the big deal about an off number? Well, here it's 1796, 118. So we're still about 60 pips above it. The reason is when you go back 2 weeks, you're looking at the memory of the market for the last 10 trading days. And, just like a daily close is important, a weekly close is even more important. And probably what you're saying, Sensei, about the um, trend line, your monthly close is, very important. So all the memory in the market is to the left, and all the 2-week or 2-candle reversal is saying it's taking in the memory of what was happening for the prior 10 trading days and where the market closed on a Friday. So, Friday closes are important. That's how you get your weekly candles. So we'll see about that. Canada came out of the hole. Blake was talking about it yesterday, and we got a nice little rally. I was saying that I actually thought the dollar looked better than Canada, and it had a magnitude percentage-wise better rally. But I certainly would not be short Canada here. But can you see the RS picture? So how do I know which one to go for? So between USD CAD and Dixie had a little stronger RSI pattern above 30, whereas CAD was, its reading was down here at 23. Okay, so I'm going to go, the RSI structure is going to give me, besides knowing that EG is, certain things. Also, 102. Okay. Um, I don't think oil has peaked yet, and that could still play a role. I wish it would trade 44 already. I'm still waiting for, this to resolve itself. Risk isn't doing much for it right here, but I'm still trying to be patient. The waiting's the hardest part, Tom Petty. And gold's all over the place. Maybe that was a failure. I think Blake said he was looking for a peak up around 2000, close enough for government work. NFP is coming out in 5 minutes. No, it's Friday. NFP, right?
It's ADP.
ADP. Okay.
Yep.
Okay. So you want to jump in here, Blake, and so that you
Well, good morning. Yeah,
Good morning,
I
bro.
just wanted to make sure I clarified that,
Oh,
as
okay.
there was a
I
comment.
think I covered enough. I don't want, I don't want to step on anyone's toes. You know what I'm most interested in is, I'm wondering how the megaphone formation looks on the S&Ps and if we're cutting
Well,
through that upper boundary. I don't
we're
know.
there. Here,
We're
let me.
there again.
Yeah, I mean, we're basically there, and so the question is, how much further are we going to go, or do we just continue? Um, so here's the S&P
Okay.
as I've been looking at it, and the one thing that we are challenging right now, or we're close to challenging. Well, we have the AB equals CD from the June, this June move. This has
Okay.
been drawn out since this weekend. The AB equals CDs, and then this one here is from the COVID lockdown lows. You know, and the reason why I took this low right here is just that was the after we hit our high, that was the next one where we had a false breakdown, so that created the low. So
Okay.
that comes in.
Well, I saw your chart of the day. The VIX is certainly sending out a flashing yellow, at least in the market.
Yeah, and I was there was a Bloomberg article that I shared with the chat room earlier about the risk of the volatility risk of this election. It's like one of the they're basically traders are paying up for
Yeah,
volatility and
insurance.
for protection. Yeah, so it's geared up to be a very, very high impact type of move in the coming months ahead. So yeah, volatility is going to be high, so we got to be
I
really
mean, here
on
we are
guard.
at new highs, and it's not 20, it's 25.
Yeah,
So
yeah, exactly,
yeah,
exactly.
anyway,
So we have ADP non-farm coming out
nice
now.
formation.
As we go through this, I want to point out that the euro has come off that channel resistance, and channel support now is going to come in around 117.90. So I'm going to write that down.
That's a 2-week off number too, right there, 117.90. Yeah,
Yeah, we're still bullish.
yeah.
As we're in this ascending channel, but this just caught people off guard. There's some comments from the ECB yesterday saying that they don't use the rate as the euro rate as a monetary tool, but they are but it does matter. And then so obviously the euro, we were trading at 119.30 when that happened yesterday, when those comments came out right through here from the ECB. I think it was ECB Lane said that, and hasn't really looked. Actually, it was right here. We were trading right around this. I think this level. Oh no! I guess it was right around here. But anyway, needless to say, the euro's traded heavy ever since, and it just we've gotten down to the 618. So there's obviously a little bit of support down here. You can see these previous highs. So I'm going to mark up today's low 118.45 as some near-term support, but we might take that out following the ADP, which is coming out in just a second. I almost forgot. Okay, let's get our data flash out. How much time we got? Got just about 40 seconds, so go ahead.
Good morning. No, I was just going to say we have 30 seconds.
Got it. Okay. So you'll see ADP. Now, Bloomberg has it for 1 million jobs to be created. Data Flash has 950. Okay. And I think I was looking at Forex Factory earlier. They had 1.25 million. So numbers are kind of all over the map, but basically, I think the benchmark will be here at 1 million. So we'll see. And data's out 428. That is worse than expected. So the dollar is getting hit as a result. The euro is coming under pressure, or the euro's, bouncing a little bit here.
Yeah.
That is a weak number, and that's going to be a little scary to some traders, because that's going to suggest that less jobs are being created, and as the fiscal cliff, I think is the proper term we need to take into account, as that starts to weigh on the market. Do we have a situation where we have the market starting to look at this weak data saying, hey, the economy is really going to slow without any help from Congress, because Congress has failed to come up with another stimulus package, and we're going to see the job losses start to take hold, and that's going to be more risk off, in my opinion, as we head into the election season. So that's something that we need to take into account. But anyway, let's go into what we've got here. So we've got the lows in the euro. Maybe we might get back up towards, maybe the 119.25. This would probably be a good level if you could get back up here for like near-term shorts. I think I don't see us getting past that today, but that doesn't mean anything. Just that's going to be right at the 50% retracement of actually the low. So that'll come in at 19.28. So I'll write 19.25 is going to be resistance. Let's see if I can get the cable here. Let's see. So the pound. We talked a lot about the cable over the last couple of days as we were rallying right into this big, this is a multi-year trend line. And notice, and I have to point this out, notice how we haven't taken out those highs. Now, I drew this late in the day yesterday, this ascending wedge that we have, and it was like this is what, Dale, you love to call it a throwover, right? So we have a bit of a throwover here, and with the cable. And so that's kind of a risk for bulls at this point. Now, I'm going to make the assumption that any rally, because of that big rejection yesterday, any rally back up to 134 should probably find resistance today. I do think that the cable is still bullish. But, we have to respect that we could dip back down to the breakout point, which is 132. It was 132.50, but I'm going to write down 132.60.
Yeah, that's a classic throwover. When they only last a day, shows exhaustion.
Yeah. And I agree with that. And so, the risk here is that we might get a bit of a pullback in the cable, but you got to use these dips as opportunities, in my opinion. Hold on really quick. I was just looking at stocks. I get one of the, if you're probably wondering, well, why are stocks continuing higher? What do you think, Stelios? Why do you think stocks might be bouncing a little bit here?
Hey, hi. Sorry, I was just typing something. Why do I think stocks are bouncing? Even
I know you were just in the middle of doing something. Just so you guys know, behind the scenes, there's other conversations that are going on, not related to this particular webinar. So,
Blake, before he answers, Welsh sent me an article about something about gamma. Do you know about that, Stel? That this gamma trade is pushing things beyond conventional measurements, evaluations. I think it has to do with the options market.
Well, a lot of options trades are influencing stocks and the indices in particular. There's been a lot of option trades on the S&P and other indices, but really on the S&P, I have a friend who works at JP Morgan, and he's been looking at that quite a bit. And when there's been a lot of core buying in options, and when that happens, the people who sell the calls, they need to hedge their delta, et cetera,
Okay.
et cetera. And then you get into other degrees of optionality. You have it's more complex stuff, but basically option trades are definitely pushing indices higher. Same with stocks like Tesla and other high volatility stocks. A lot of call buying, and that call buying is pushing things higher simply because they need to be hedged. So,
Okay.
but I'm
And
not.
Jim said
and I
that
read-
this reminded him of, he said, I remember 1987, where there was some type of, option related thing happening that led to the crash. So anyway, and
Could be. I
he's not an
trading.
alarmist. All right, don't rub it in. That you're
No,
such a young man.
but I'm glad you bring that up, Dale, because I was reading that a very similar article. I can't remember if it was over the weekend or it was on Monday. Could have been the exact same article Jim was reading, but there has been, I mean, the amount of call buying in these big tech names has been astronomical. And so that gamma is pushing up the market, if you will. But one of the reasons why, just if you think about this morning, why the S&P is rallying off of that very weak data, is because that will also force the hand of of Congress to potentially put together some sort of stimulus package here in the next couple of weeks, because this is pretty much it before the election if they're gonna get something done. So, which obviously with the weakness in employment, that seems like
Could
the
be
risk.
polls narrowing. Biden had a big lead, and it's really tightened up after the
Yeah, but
Republican
that's
convention.
I believe that's a Trump pause. Trump is a negative for equities, and it's funny.
Okay.
You can debate. There's a big debate out there whether it is
Okay.
or whether it isn't, because people will say, well, we know what we get with Trump, so this is we're going to get more of the same. I actually think it's going to be a bigger headwind for the global economy, because I think Trump is really going to go balls to the wall,
Ape
if
shit.
you will.
Yeah.
Yeah, with with our trade partners. So I think it's going to be viewed as a more of a market negative. But that's just that, again, that's my
China.
opinion based on an attitude that may be taken once he's secured a second term. So
Oh God.
I don't think he's going to be. I don't think he's going to play Mr. Nice Guy at all. So. So anyway, but that's if the market starts to price in a second Trump term, it's going to be interesting to see how markets respond to it. I think it's going to be a negative response, but again, that's just an opinion. Okay, so here's the Aussie. The Aussie's got support here, and this is if you guys recall from yesterday, I drew this red line here because this is the throw over level, or the previous channel, right? That's the previous channel, and we held it, and so that's going to be 73.15. So for right now, 73.15. While we're above that level resistance, we have to remain bullish. Okay, now I do think that we're going to find some resistance in the Aussie, and we might just find it here at the 73.50 level. But I'm going to say that I would give it all the way back up to 73.80. Okay, and the reason why I say that is you can see this high right here, right? Okay. That high right there, there's a resistance there. So even if we break this channel, we probably find some resistance as we head up there. So that's what I'm thinking with the Aussie near term. Let's go over to the Kiwi. So the Kiwi, the Kiwi has been holding up really well. I want to point out that the Kiwi has been divergent relative strength intraday, but unless we drop back below 67.15. We have to remain bullish. Okay, it's not moving quickly, but you know, I'm assuming because this RSI is divergent, that relative strength may come down to mid-range, like this. Okay. And if it comes down to mid-range, that may just bring price back down towards, the 67.15 before we can, consolidate and move higher again. So resistance right now is 67. I mean, the highs overnight, 67.89, so 67.90. Okay. Dollar Canadian. So as Dale pointed out, we did come out of the hole here. We were, this is channel support. It held, it's 130, and I'm assuming that's going to be pretty good support right now. The dollar Canadian could be developing a, an inverted head and shoulder pattern if we can hold 130.50. So in other words, if we do this, and then, I don't know, do something like that, it might develop like an inverted head and shoulder pattern, take us back up towards this resistance. So I would be interested in the dollar Canadian to see if it can hold 130.50. Resistance right now is going to be 130.90 intraday. Dollar Swiss. So yesterday we talked about the dollar Swiss and how important, well, it was reversing and it held 91 cents. We broke above that, which, I have to admit, the dollar Swiss is holding up pretty darn well. You can see it in the Euro Swiss, but I'm going to say that that if we have some sort of selling, if we see some sort of selling in the markets, the Swiss franc may gain strength again. That's the one thing that you do have to be a little bit more careful with. But for right now, resistance is going to be at, well, we have 91.60, but really 92 and then 92.50. You guys know that while we're below all those levels, there's no reason to be bullish. But at the same time, I think you have to be more careful on being a bear at this point, especially now that we've broken some of this resistance here. This is the previous triangle. I would expect dips back down towards, probably these lows right here are going to be supported. So that comes in at the 90.50 level in case we do dip. Let's go over to the dollar yen. Dollar yen still extremely messy. I have zero desire to trade the dollar yen, but what we did hit is 106.25, which is the 618 retracement of this. This is the Abe sell-off. We hit the 618. So while we're below 106.25, I think you got to be a little careful. Support right now is going to be down here at 105.60. Okay, let's go over to the dollar index. And we have labor productivity in, let me make sure I don't.
Canada, yeah, forget about that.
Yeah. Let's open the data flash. I don't need to bring up Bloomberg for this. We do have that coming out here in just a minute. I'll come back to that in just a second. Let me just finish off the, let's see, we did the dollar yen is range bound. Let's go do the dollar index really quick. So the dollar index, if you look at yesterday's candle, this is a little hammer. So that hammer that you see there created the upside that we're getting right now. Is this gonna be, long lasting? I don't know. We're right off of this is a big multi-year trend line. You can see it right here from 2011. So we're holding it. Will the dollar continue to bounce? It may. I think that, like the euro, we may just be doing something very similar to the euro dollar, which would be, let's just do this.
Nice 3 drive.
Yeah. 1, 2. This is your 3 drive, right? Reversal.
Yeah.
So, I mean, that might take us to 93.10, maybe.
Yeah. Mhm.
Did you
I
trade
think-
that 3 drive?
Yeah, and Forex Gal sent me an article about hedge funds selling the dollar for the first time in years, getting short the dollar. Kind of a little late to the party, but
Yeah, they were
Yeah.
probably late around the 120 level in the euro.
yeah.
Imagine, depends on what their time horizon is. In short-term trade, yeah, it looks like they're very late to the party, but if they have a long-term time horizon, they might not be.
Yeah, and that's the thing is I personally I still think that the euro is going to be going higher over time, just or the dollar index is going lower over time. It's just
What would be an ideal entry for you, Blake? Around 116, if we got down there.
what's that?
What would be an ideal long entry? About 116 in the euro.
Yeah, and well, I think it's actually 115 personally.
Okay, all right.
Yeah, because I believe that it's this move right here. Come down.
All right,
bounce off
115. I
115.
see
Yep.
that. Okay.
That would be there. Yeah,
That's the
that's
previous
ultimately-
high. That high
Yeah,
there.
and maybe we could even go further than that. I think
Yeah.
that it's entirely possible. So, anyway, yeah. So let me finish up here so I can
Okay.
I can hand things over to Steven. I just missed the Canadian data too. But it didn't move the Canadian much at all. So, okay. Dollar index. So back to the dollar index. So support for the dollar, intraday. I mean, I have to imagine that these previous lows, you can see some of these hourly lows down here. I just don't think we're going to come all the way back down here. I mean, maybe we will. Maybe the euro does rally back up to 119 and change. But, personally, I think that that we're, seeing the dollar index, creep back up to 93 and the euro is going to be coming back down to 118. So, I guess pullbacks to 92. I mean, I'm going to write down 92.20, but I just, it's not a great support. I just think somewhere down there is going to offer, some support if we get down there. All right. Let's go over to the dollar Mexican peso. Dollar Mexican peso has been very choppy, but I have to say, like I said yesterday, if we get above this 21.95, might take some of the downside pressure off. We held the 88% retracement yesterday on the dip, which came to basically 21.67. So okay. US dollar, Norwegian krona. Previous support here should offer resistance. And, you look longer term, this is like a whole resistance zone. So right through here. So I'm going to mark the top of that, which comes in at 882. And that was a significant number before. Okay. And, dips back down towards, I just don't think we're going to make it all the way down here. That's 871. I'm just going to go ahead and write that down for now. I mean, it's, again, this is not, these are a lot of, you can see when I think they're very significant levels, I'll put an asterisk, like I should actually put an asterisk there. And I should probably put an asterisk here. But when they don't have asterisks next to them, that means they're just not very significant. Like I think the US dollar Norwegian krona could find some support down here at 871. I just think that, better support is going to be way down here at 862. Today, I just don't even think we're going anywhere near it, based on the reversals that we've seen in the dollar the last, 24 or 48 hours. All right, let's go to gold really quick. Now, the one thing that would signal to me that the dollar is really going to make a big move is gold. And right now, gold. And remember, Steve, you remember when I had it drawn like this, and then
Yes,
you're
mate.
like, you're like, drop it down, which, worked out really well, because when we got past that trend line that you had told me to draw, we actually rallied, but we did stop at the 78% retracement, which is probably closer to a 38. No, it's a 50% retracement here of this drop. Okay, let me go ahead and take that back. So it looks like that the triangle is going to be a little bit more symmetrical, which is good, because then we can say, all right, above 2000, it's bullish, or let's call it 1995 right now. I mean, overall, the trend is bullish, but we're going to just mark up 1995. We get above that, and then, we're going to take on these all-time highs again. And then obviously a move below, at this point, 1925 would be bearish. So
The problem
Okay.
with corrections has always been that it's impossible to predict how they unfold, from when they start.
for what? What?
The problem with corrective moves is that it's impossible to predict how they're going to unfold. I mean, sometimes they look like they might end up correcting more in price, but then it might, the case might be that they correct more in time, and then sometimes, corrections get prolonged way more than you would expect initially. So it's a very, very tough game
Yeah.
to, to make assumption.
Good point.
So I'm pretty sure there is a good chance that at some point gold is going to continue higher, and people are going to still be wondering if it's, within a corrective formation or not.
Yeah, that's a good point. Let me finish up with the S&P really quick. So the AB equals CDs, these also intersect at 3570, which is right here. All right, you could probably say 3575. That, I mean, we're already at really key resistance, 3575, but the AB equals CDs complete there. And what's to be seen is this just going to be another speed bump in the grand scheme of things? I do think this confluence of so many different resistance levels, whether it's the megaphone top, AB equals CD moves, this is going to create some, at least the index to stop here or near here. Will it create a reversal? I think we're going to have to see a real change in sentiment, which, I've been around long enough, trading almost going on to be 24 years this year. Started trading in 96. I started in the business in 95. I've been trading long enough now to know that sentiment can change. And when it changes quickly. And it's those situations where you're like, today's Wednesday, and you go, it could be Friday, and you'd be like, wow, the market changed a lot between Wednesday and Friday. And I'm not saying that it's necessarily going to happen today. I'm just saying, or this week, I'm just saying you have to be really, really careful as the market is obviously extended. Doesn't mean
a stronger dollar had no impact on indexes yesterday, but if this turn and the dollar has legs, I think it will.
Well, yeah, we'll see. 35,
Maybe we get
25.
that throw over first, Blake, on that megaphone. Looks like it's trying.
It might, and 34.85 is going to be support here. So I'm just writing down a couple levels of support for the market. They're not great, but they are support levels. It's one of those things that you know, if we start seeing some selling and we start hitting some supports, if we break a couple of them, that should really, you know, grab your attention. So anyway, that is it. The bias chart is done. And Steve, good morning. I know you're quite busy. It's nice that you can be here and chat with us today. So what do you think about the, I don't know, market in general?
You know, everything seems rational.
What do you mean?
No excesses here whatsoever.
Yeah.
This market seems, you know, to be
Normal.
moving based on fundamentals and, you know, the healthy economic environment. So, you know, what
You
is
guys
there to
can't sense
object
the
to?
sarcasm here, can you?
Yeah.
All right. Well, I'm gonna let you take the reins here with the analysis. But before I do so, I just need to mention, guys, if you're not part of the Forex Analytics community, make sure you visit our webinar sponsors. You can go to the Forex sponsored page and just check it out. See what's right for you. See if you can get into Forex Analytics possibly for free for a little while with Pepperstone Securities, or at least get cashback rebates. Make sure you use this link here if you're going to go by the way of Pepperstone. Which, by the way, I'm doing a premium event with some of their premium clients, you know, here in the next week or two. I'm sure I'll have some sort of after the fact recording for you guys, you know, maybe, you know, a week later. But, you know, the fact of the matter is that, you know, we're forming a bit of a tie with Pepperstone Securities, and they have a lot of great offerings from an analysis perspective. So you should check them out. All right. And I think it's a great compliment actually to what we do, you know, it's because it's so much fundamental and, you know, looking at volatility and ranges and whatnot. So anyway, I'm going to pass it over to you guys. So
Thank you, Blake.
Thank you, mate.
Thanks, guys.
Thanks.
Have a
Good luck today, Blake.
Thank you.
Hey, guys. So,
Hey,
how you doing? Everything all right?
Yeah.
How you doing?
Good. I'm good. So,
Elias, by the way, your microphone sounds awesome.
It does,
so you know.
yeah. Thank you.
Yeah.
I was going to start with the ECB. And Philip Lane, the chief economist, was speaking yesterday. Blake mentioned it. And, you know, if you go to the ECB website, they say that the objective of ECB's monetary policy is to maintain price stability. End of story. It's not to, you know, lift stocks higher or get the euro lower or whatever. And, you know, he came out yesterday, says, oh, you know, we don't look at exchange rates, but it does matter for monetary policy. So another thing that they look at and they want to control. So I don't know what's left for them to not be controlling, but they're telling us slowly that, look, we're not going to let the currency go too far one way or another. And if you remember, if you go back a few years, above 120 euro dollar is the, let's say, the pain threshold for them. And that's where they start becoming a little bit more vocal about it. So just something to keep in mind with the euro dollar and its recent move. The other thing I wanted to mention was the fact that in the US, we had Mnuchin, who's been talking again about the need for more stimulus. And I think they're going to try and restart the negotiations. And the Republicans want they want a low amount. The Democrats want trillions upon trillions. In the end, they're going to get something done, but there's going to be a lot of negotiation beforehand. And as Blake correctly said, the stimulus plan from before, the payments and everything, they're going to be stopping. So if that happens and they don't figure something out to keep them going while we still have millions and millions of unemployed people, then that's going to be felt in the economy for sure. At the moment, it was, this patch that they've done with effectively helicopter money in people's accounts. It is working.
In essence,
But
it's universal basic income still.
it is, yes, it is.
Yeah.
And as I've said before so many times, I disagree with with helicopter money, but this was probably the best way that they got money to people. Forget QE and ZIRP and all that. That's the way to actually get them the money across. But anyway, yes, our friend Sansi says exchange rates do impact price stability. Of course they do, but they're going to be looking at CPI.
Depends on the nature of the economy. If it's
Yes.
an exporting economy or an importing economy.
Yes, there are many factors, but yes, of
For
course.
example, a strong move lower for the dollar is definitely going to impact inflation in the US by a lot due to the huge trade deficit.
Yes, exactly. And
but Germany, for example, it's the opposite story.
Yeah, Germany. Well, they no longer have the Deutschmark, right? They're very
Yeah,
happy
I mean,
with the euro.
Yeah.
Yeah.
Doesn't matter.
Anyway,
it doesn't matter if they have a unique currency or not.
Yeah. Yeah. And what else we have? We had Australian GDP came in quite a bit worse than expected. I mean, okay, given the magnitude, it's probably not that
Isn't that
bad,
positive?
but minus sorry, what?
Isn't that a good thing?
minus 6% expected quarter on quarter, minus 7% came in at. And remember, we had the RBA, was it yesterday or the day before? Yesterday. And they were on the dovish side. So this is not going to help the Aussie. And as expected, it is underperforming today. Other than that, ADP went through. That ADP is quite volatile as a number, and sometimes it moves the opposite way. I mean, it can beat and then payrolls miss, or it can miss and non-farm payrolls beat. So I think people are really waiting for Friday, and hence today the dollar is not really responding to that number. And that is pretty much it. I mean, equities obviously just keep going, and there's no stopping them, even though the dollar is strengthening. Remember, we were saying every day when I woke up in the morning, I would see the dollar a little bit lower, stocks a little bit higher. Well, that correlation kind of makes sense. Today, the dollar is a little bit higher, and stocks are a little bit higher. So go figure that one out. And the DAX,
it's very simple. Stocks move higher every day, and what happens to the rest just determines, the short-term correlations.
Yes, and the DAX is outperforming. That's probably because of the euro outperforming as well, because there's a loose correlation between the currency and the equity indices, and the euro falling means the DAX is going to be rallying, but obviously it's outperforming quite a bit today.
Yeah, the DAX just by eyeballing it, Stelio, seems to maintain its usual correlation with the Dow, right? It's much better correlated to the Dow than it is with the S&P.
Yes.
And especially the Nasdaq, right?
Yeah. And anyway, it is what it is. We wait for Friday. I think there's not much more to do. So probably a grind higher until Friday, and then we grind even higher.
I mean, then we grind higher at a faster pace.
Yeah, I don't know what to say. I've missed this move, and I'm just watching it for now.
This is the best place to buy, Stelia.
It is, of course, yeah. I could never do it.
We're already 0.25% lower from the highs of the day. I mean, you won't get such a chance easily again.
It's a generational dip. Yes, I get
it. Okay. Okay. Anything else, mate?
No. I mean, also probably worth mentioning, metals are retreating a little bit in line with dollar strengthening. I have said for a while that I am expecting a proper pullback in metals. Long term, I think they're going a lot higher, but maybe if we get a risk-off move as well, they're going to get a nice little drop where we can get long into it.
Let me Google this.
Risk-off move, yeah.
Sorry, last time, it was a long time ago. I wasn't
Yeah.
sure.
Yes.
Okay, so yeah, okay, let's go through the charts then.
Yep.
I'm assuming, Stelian, you have to give me a few questions because I logged in very, very late due to working on other stuff. I'm assuming that, I saw that Blake covered at the end. He had covered all the majors and effects. So, I'm assuming that I have nothing different to say having to do with them. So we can go ahead and look some of the other assets. I'm going to start from the DXY just to say that, yes, the DXY seems to be rebounding from this descending channel. Now, as I was saying the previous time, the DXY was trying to rebound here. Yeah, okay. We are trying to put in the second day of a rebound. Yesterday's candlestick is quite a bullish one, with whatever that might mean nowadays. It was an outside hammer. So, under normal circumstances, that can be considered in a prolonged downtrend as a bullish reversal candlestick. Now, so far we're seeing follow through, but the first obstacle here will obviously be breaking through the descending channel trendline resistance. The second obstacle here is going to be, as we were talking about the previous time, breaking through the horizontal resistance area at 94. So bottom line, below 94 in the DXY, there is no real technical argument to be made that somebody should be long. Yes, clearly, there is no risk reward in being short after such a strong move lower and an obvious loss of downside momentum. But we've seen in very strong trends that sometimes, loss of momentum is the only short-term type of correction you might see before just accelerating the downside. I mean, since we know there is a decent correlation between them, you can say the exact same thing about stocks. I mean, just look at this. The S&P, we had this amazing move to the upside. Then we just had like a consolidation, and then we accelerated higher with, an even more impressive pace to the upside. Of course, Nasdaq, even a more prominent example. I mean, we had a long period here of loss of momentum and divergences, and these divergences just got resolved by accelerating to the upside and finally managing to break through the series of lower lows in the RSI just by producing an even more ridiculous move to the upside. Historically speaking, I was just looking back in the chart in the most extreme periods of the index going higher, and the angle of acceleration, it seems to be higher even from the 99 era, where we had that amazing rally. Of course, that's a little bit skewed, because when you go so much back in time and in price, then a logarithmic scale is the one that's going to show you, a more real picture. And taking that into account, probably that was even crazier. Now, can we really match up that period? We are putting in a very, very decent effort. Just keep in mind that from the lows that we got in the closer to the end of March, we've now rallied something like 92%. And even from the yearly opening price, in the case of the Nasdaq, we have a move that's more than 40% higher, which matches up anything we've seen post the previous bubble at 2008, and we're still in August, in a year that has had the biggest black swan that we've seen in decades. So, go figure. It's very hard to fight this trend. Obviously, criteria like it's exaggerated, it's overdone, we're overbought, and things like that don't play any role. I mean, we just get consecutive up days one after the other and new all-time highs. Keep in mind that the VIX is still positively correlated to the S&P, and the equivalent Nasdaq volatility index is also positively correlated during the past couple of weeks to the price. if you historically go back, you'll see that whenever we have periods that there is a positive correlation between the price of the index and its volatility index, we're always seeing reversals. Is that a time indicator? No, it isn't. That doesn't mean that it can't go on for another 5 days, 10 days, 15 days. Now, on the other hand, does this mean that probably this is a good place that somebody could get some exposure being long in volatility? Yes, I think it's actually a very reasonable trade if you're willing to buy some volatility calls, you know, and willing to hold to them for a few weeks. But it is what it is, and even after such an appreciation, even if we take the S&P, which is the barometer, the global barometer for risk appetite, we might just see like some type of a very shallow pullback back to 3,400, right, which is the previous all-time high prior to the COVID, huge move to the downside. So also monitoring this ascending channel, with whatever value that might have, because we keep monitoring one formation, one super bullish formation after the next, only to change it with an even more bullish one, and nothing seems to be working for the time being. The market is completely unfazed, and there seems to be no metric and no value that market participants think it's persuasive enough for them to take a pause. So it is what it is. This is the result of the massive amounts of inflation we see, using once again the traditional definition of the word inflation, right? The expansion of the money supply and credit. So we know that this is being injected exactly there in the financial markets, and it almost never trickles down, but it stays there, and its effect on asset prices is the one we've been seeing during the past 10 years, and now that we're in a period of unprecedented extent of opening the monetary stimulus and fiscal, although it's almost the same thing given the fact that it's being financed completely by monetary policy spigots. That's the effect we have. Anyhow, having to do with precious metals, gold is holding above this ascending trend line support, and that's all you need to know here, because yes, this triangle might be like this, we might have already broken out, who knows? Nobody can tell in advance. We're going to find out when the price action starts becoming impulsive once again. That's not the case yet. But as long as we stay above this ascending trend line support, there is definitely no argument to be made for somebody to want to be short gold. And it's funny because you're seeing people that are like super bullish stock indices and are very cautious about precious metals. I mean, what is currently driving stock indices to the upside is exactly the same fundamental reason that is driving and should continue driving precious metals higher. So you can't really be so conservative about precious metals, but being so bullish and um, content with what you're seeing in risk assets. In any case, silver, more or less the same deal. Corrective formations. Have we broken out from them yet? We're going to find out rather soon. As I said, price and momentum are going to tell us when that's a given, when we can be more or less assured that we've seen the beginning of another leg higher. Until that happens, I really wouldn't want to be fighting the trend. Platinum definitely, seems a lot less bullish. Testing once again. I mean, this is what, like the 8th, 9th consecutive day that it's been toying around with this channel trend line support. So that's quite important. If we break through it, 875 is going to be key for the bulls to hold. Below that, I think we can see more downside. But until that happens, there is also not a real negative signal here either. Now, I'm more focused here on Palladium because Palladium is probably the precipice of some big breakout. And, the last 2 days have left behind significant upper wicks in the candlesticks, and that is, a mitigating factor in combination with the candlestick that we're seeing unfolding so far today, which is rather negative. So, I would definitely be more conservative here until we see something, better looking. Now, having to do with natural gas, we talked about it a couple of days ago. When we were testing during the webinar this channel, I said that, listen, this channel is quite important. It has guided the recovery higher. 275 was a nice confluence of resistances. We got rejected from there. We broke through this ascending channel. So, I would be rather careful. I have no involvement with this trade anymore. I took profits, when we reached my target at 250, and didn't have any regrets seeing it move higher. I mean, I had an initial plan. I followed it. I made good money here. I don't really care if it would move higher. Now, is this pullback something we should be buying? I think we need to see a little bit more price action to say. But in general, I would have to say that as long as we trade above 205, there is a good argument to be made that this might have been like some type of a bottoming formation. So I would say, I would be more inclined to look into buying the dip than anything else. Now, crude oil has really died having to do with any type of volatility. I'm pretty sure that one day this market is going to just explode and people won't even realize because people probably have even stopped looking at it. But this formation, tells me that, my initial assumption is still going to be vindicated. I either expect this formation to break to the upside for a very short-term move, catch people in the wrong direction, then reverse lower quite violently, or just plunge through support and reverse violently before we can find again a nice area to buy, like $29 or whatever. Okay, I heard that very discreet guitar note.
Thank you,
Dale?
Steve, for coming back today. I miss your reviews.
Who do we have today?
Nargis.
Oh, okay, nice. Okay,
Okay,
so you're gonna definitely have to handle with a much softer voice than mine for the rest of the webinar.
yes. She calls it when I interview her a date with Dale.
Date
So,
with Dale, perfect.
yeah.
So start being a gentleman finally, and next time bring some flowers.
Oh, okay. I will
bring
be.
some flowers and candies to the lady.
All right.
Okay.
All right. Well, I'm still married, but okay.
I know.
Nothing wrong with flowers. So,
trust me, I'm not going to tell your wife.
Okay. You
Okay,
can't either,
promise.
Nargis. All right. So, Nargis Motorwala is with us. And Nargis, I'm going to ask you to unmute right now. Welcome back to Face.
Hi, good morning. Can you hear me?
Yes, good morning
We can
to
hear
you, West Coaster.
Hi.
Hi,
So, yeah,
we're up before the roosters.
So it says you cannot share your screen because someone else is sharing.
You can.
Okay.
I've sharing.
Okay. So can you? One second.
You're all business. So click the screen again. There you go.
You can see, right?
Yes.
Your Twitter
tweet,
stream.
Yes. Yeah. Good morning. So now you can, I was hearing you were saying that you'll not tell your wife. I mean, you're declaring it on the internet, yeah. So
what am I declaring?
No, the other one, he was saying, I'll not tell your wife. So I was like, you're shouting it out on the internet. So
oh yeah, that's why he did it. Steve, besides being a trader, Steve's a blackmail artist.
Yeah, absolutely. Actually, that's where I make most of my money.
That's his supplementary income when he's going through a drawdown. So anyway, Nargis, great to have you back. I know you've been talking about a megaphone, and I just always look forward to seeing your work, and you're one of the hardest working technical people I know. So take it away.
Yeah. So since we were talking
And
about,
oh yeah, and you were real right too. From the last interview, you had upside objectives for everything.
yeah, yes. So since we were just, joking about, I had put down some observation regarding you and me, Dale. So I just put a line here. I don't know where did it go. Can this sort it by?
We've
Oh
done
man,
9 interviews.
no, not 9, but yeah. So somewhere it was in 11, 12, 18, and September 18. I
Okay.
just put a line. I don't know
9,
why.
8.
Where did it go? 9, 18. Somewhere here, right?
Yeah, that would
Somewhere
be
here, and
September.
yeah, and
Yeah.
then September, and somewhere in December 18 as well. This is December, right? And
Right.
this is September, yeah. And one is here, other one is here, and today we are here, right?
Yeah.
So
Wow, what a
date
ride.
with, yeah. So a date with Dale results in what? 1, 2, 3, 4. 5th will be a charm, Dale.
Could be. What do you
So
fifth this yeah, so go ahead and yeah, I think we're getting close for some type of reaction. I think it's going to happen this month. I know that's, as you know, Ben has a series of dates in September, and I follow the change of seasons. But I was wondering the megaphone that you're using, if we're cracking above it now. No, we're still respecting it.
today, the market is about
Yeah.
to open, so it will be, somewhere here.
Okay. Yeah.
It's what ES is 47, so just about the border of the line.
Okay.
Yeah.
Okay.
So no, in just lighter note, I was saying that whenever you and I meet in the next few days, market pulls back. That's what I was.
Oh, okay. So yeah, so if that's a signal then. So
Yeah,
everyone,
it's a yeah. So it's a signal. So maybe in
okay.
the next few days, yeah,
Yeah.
who knows?
Well, the dollar's turned. Looks like it's trying to turn, and that could be a factor. It doesn't all have to happen the same day, but if we're going to get a dollar rally, that's not exactly positive for the market, but it's shaken off everything. Do you know about these things that they're talking about in the options market? I know you do credit spreads and things like
Yeah.
that about gamma, and all the option activity is really what's behind this parabolic move in the S&Ps.
I I personally, I don't uh, go too much around hearing what in terms of news activity, but gamma and all, yeah, I mean everything is so bloated up. Yesterday my VIX calls, it was
Yeah.
going down, but my option price was going up. So everything is really bloated. The IV is high on either side. And that could be one of the reasons, like even the puts, even though the market is rising up, the puts value is increasing because people do realize that this is kind of an insane thing going on. It's sometimes, I think I put out my tweet also a couple of days ago, that this is reminding of Jan 2018, where we are looking for a pause, but it doesn't. It just jumps the next day. The moment you think, okay, it is ready to, I mean, we are not talking about a big thing, a crash or something, but regular everyday thing, right? Price goes up, it relaxes a bit, takes a breather, especially on a smaller time frame, right?
Right.
Uh,
So now, I mean, really, this has turned into parabolic stuff. So
yes, parabolic, like exactly Jan 2000. See this XPX.
yeah,
XPX, this is 2000, sorry, this is August 21, and today we are September 2nd. It hasn't come down to touch this red line at all, and that doesn't happen in, that is too long a time for it to not do that. So that itself says what powerful moves are going on in the markets. Where
so what do you
even
do up here? Do you just wait for a dip to buy? Do you I think you talked about VIX, you're long some VIX calls.
Yeah, I have
or
some December hedging basically.
okay,
So I have some December calls because buying shorter term doesn't make sense because VIX doesn't move. It only moves suddenly, or only
Yeah.
after the last in the last legs of the pullbacks. Generally, the fire happens. So if it all is
Okay.
it's to happen, then it's better to have around the election time versus doing anything now.
Okay. Yeah, it makes sense to buy time
Yeah,
because
VIX with VIX you
they're
have to have time, otherwise it's basically throwing your money away. And that too, it is the idea is as a more of a hedge versus making money out of it, for me
right.
at least. So
So
yeah,
you were going to cover the dollar today?
oh, I think just before this, you guys were talking about dollar, right? So
Yeah.
I also track. I mean, at least just to get a bigger picture, I do track all these things. I put out few tweets where I said, this was going to go down, and below 93.5 it may have some weakness, and below 91 it should, it is not good. It may go and test the previous lows of 88, 89 up till 81. But looks like we did this generally gives a good bounce, this pattern, and it will throw it off here somewhere.
What's it called, that pattern?
I call it 3SR. Just my
You call it
but
three what?
SR.
Oh, okay.
But I
call the
forgot what
pattern
SR stands for now. It's been a
Yeah.
long time.
three
I forgot the
drives to a
original why I put that SR.
All right. It's 3 drives to a bottom
Three
formation.
drives, yeah. So basically, you jump onto it 3 times, and then it gives a bounce. So important thing is it should break out of here. That's 93.5 something,
Yeah.
and then possibly go up, come down, and if this move is good for upside, form an ABC and then take off.
Okay.
So
So where's the cloud come in above
cloud
the
is
dollar?
yeah. So basically, sitting up here, like what is that number? 93 approximately here. So
Mhm.
in this range, it is good to move up until this wherever this is coming. So if it moves fast now, then it's like suppose today's candle, it's all okay to go till here. Then so this will
96,
be
95 and a half.
yeah.
Yeah.
So this will be
Okay.
an area where it will have to recover until either if it goes here, hits here, comes here ABC, then maybe find some good stuff to go back up here, jumping. It has to come here in this area to say we are, now it's a bullish trend to start.
Okay.
So for
All
now,
right.
it's all
But I mean,
just
you
looking
kind
for
of
a bounce.
notice that market's been going down, dollar's been going down. So if we get a dollar pop, that could be a catalyst
Yeah.
for some risk off, because
Mm.
that's the only reason people are buying the dollar, is because they're worried about something in Europe,
Yeah.
right?
Yes, possibly. I don't track all the currencies, euro, so I cannot comment, how tightly they are related. But just overall trend. I mean, you guys are the best guys to say, okay, what's happening in euro and all that FXC and everything. But looks like FXC, I mean, the euro at least was on a good bullish trend, but I haven't checked on it recently.
Yeah. So some of the craziness. All right, go ahead and just go. Go ahead.
No, I was just trying to.
Okay, so you posted this way before we got up there. Is that what you're
Yeah. This is
showing
from our last interview we were talking about, right? So we were somewhere here when we were talking, and I said we are expecting it to, if this pattern is real, then we expect it to go somewhere, hit around here. The idea was it should go, I mean, based on the extension and target, somewhere around 3,700 to 4,000. Basically, the cycle comes in at 38.49. That's the number. So if it can go up till there, but this is already touching here.
Yeah.
So it's a little the timing. I mean, the number wise, everything it it didn't. It's in 3,500s and it's already touching here. So right now we have to see whether this. I mean, yes, in a normal everyday thing, it should pull back some, but will it cause into this? That cannot be said because it hasn't gone to its number yet. So it's possible that it may come back here some a little bit and then continue.
Let me coach you.
Sure.
Okay, let the perhaps we get a throw over, which means
Yeah, throw
we
over.
get some action above it, and you let that happen, and then next time back inside the megaphone is
inside,
your
yeah.
signal.
Yeah. So yes, I was coming to that. Currently we are getting a throw off, tiny bit right now, but yes, 30s, 35, 71, 95, 3601 is a good resistance area. Somewhere here, 3600.
Do you have
it's
anything
not
around
much.
3640? I know some people came in with that count. 3640, 3650. Anything up there?
Yes,
That-
yeah, possibly, because between one level and two level, I always divide it into 4 parts.
Okay.
So this 3541, it's also coming, it's the 50% of two numbers. So
Okay.
so yes, you will always have a number going there. And what I have seen with ES or XPX is, let's say I've said 3849 is the number. It may not exactly touch 3849. Either it will undercut it or it will overcut it. Like last time, 3365 was the number. It went all the way to 3397.5. The
Right.
another between two levels, 50% of that level. So
Okay,
ES
interesting.
does 50% very well. I mean,
Okay.
it's somebody has programmed it for that.
Yeah,
So
the coders.
yeah, so it generally does. So what it indicates is, if it is doing that, is even though it will pull back because it is too bloated to do anything else, rather than come. I mean, bloated to do some, and then come down. What am I saying? Anyway,
You're expecting some type of pullback correction,
yes.
not a crash.
Not a crash. I mean, regular. Let's talk of a regular everyday crash. Will happen when it will happen.
Right.
What it indicates is that it is not done and it will come back for it. So when it didn't stop at 3365 and went to 3397.5, that it indicated that it wants higher, and later on it will come back. So even though we had a very big crash, it went to all the way to 2100. It recovered all of that and pushed higher. So since around those times, I've been putting out that number of 3700, 4037. So from there, it gave me an idea that it has taken out the level of 50%, and which indicates it's trying to reset the cycle for higher.
Okay.
So, yeah.
All
and
right. Okay,
so,
the banks.
Yeah, so generally I do track those, for overall who is doing what, and this is also kind of, this indicates that, earlier when it was going up, it was not so much space. It pulled down all that much, made some space up, and now see XPX monthly, it's already out of this, so it doesn't have much room. It may poke a little bit here, there, somewhere, like up till 3601 or under 3601, maybe 95, 71 to 3601, a little bit poke, whatever number you're saying, 3640 or so. I doubt it may do it, but yes. And then, pull back some. It has to, because relax. I'm not saying, okay, let's go and, declare a war or something, but yeah. So
glaring monthly divergence. What's this? A weekly? Same picture.
Yeah. So see, no relaxation at all, and NDX is very sharp, very, very sharp.
Yeah.
Nothing has happened on it. I mean, it doesn't know how to relax. We need to give it some meditation videos to, listen and relax and go calm down somewhere.
Yeah. Really a phenomenal move.
Yes.
After the COVID crash, I never would have expected, this type of parabolic move.
Yes, it was surprising. And remember, we mentioned that, I was mentioning this V is getting sharper than the previous one. The recovery and the distance, the angle is reducing. So now if it does a little bit trapping here and then comes back up. The beauty of it, we have to see it, will it do a straight line and repeat this pattern, or it will try to break it a little bit and then, you know, do something like this, complete its number and then do it. Like, because we have that.
Could the speed of the advance and how quick this advance was make it even more vulnerable than the previous advance that was more orderly?
Yeah, so that's what I'll be very interesting and looking forward to seeing whether it does this right away, or does this little bit, does this complete its number 37, 50, 38, 49, somewhere there, and
Right.
then does this. So that's why I put this line a little bit further away, because that mystery of election is between us, right?
Okay, so that's at the end of 2021. It looks like that green line.
Yeah, so
I
this
mean,
I
that
was
last red line. Yeah.
yes,
SEP 21 next year.
Yeah. So yesterday I was looking at something and I thought, oh yes, I know what I was looking at. I will show you. Why would it do this? Why would this trading view do this to me? Or was it? Oh, it was XPX. That's why. No, not XPX. Yeah. So I was trying.
Wow.
I was basically, in simple sense, I was just trying to measure the distance between two lows.
Okay.
From January 18th, from here to here.
Yeah.
And from here to here. And then I just put forward, you know, where it will go. So that was coming to somewhere here. The low, basically, the next low.
Okay.
So it just, so I thought,
1800.
you know,
Mhm.
yeah, if it wants to touch, if it wants to touch the megaphone down, so somewhere here. I mean, timing wise, it's just something I was thinking, but we don't know how it will happen. If it wants to do it right away, then we'll fall in the next few weeks. We should see somewhere here. If not, then do it here, and then there is November time frame. Then there is next year. A lot of people have come out and saying that, you know, we'll have something in March, something in June, and so I just measured this, and I just progressed it to here. So I just put a line to see whether what actually happens for my observation, and that's all.
Right. Okay. So, yeah, I mean, you have 3 points there on the bottom, so it's a valid line.
Yeah.
I like it. Don't erase that. Keep it for a year and see what happens. That one chart.
Yeah. That's why I draw things, so that you know, there's a reference point for me to see, okay, what happened when my thoughts were like this. So yeah. Okay. So we did talk about you know, how we did and all that, and we just said that we are looking for ES to go to, you know, 38, 49, 45, 40, 49. It is actually not 45. So this is where it will complete its price cycle. So I always assume 50% less or more than what it wants, the actual number. If it still wants to go here, then it may undercut. It may go above of the some 50% level, crash, and then, you know, it'll come back.
I know people looking for 4,500.
Oh,
besides you.
They are?
Yeah.
Oh.
Maybe not till next year. But
this, I mean, you know what, Dale, putting a time is like, you know, banging your head, because this thing does 100 points in a week or 200 points in a week. And NQ is already at 12,500. I mean, 70 points are left, 60 points are left for 12,500.
You know, I've never seen a decline and a recovery with this kind of acceleration both ways in my career, and I've been doing it about, I don't know, 6-7 months longer than you.
Yeah, I mean, you must have seen multiple things.
But I've never seen this. This is unprecedented. Okay.
Okay, good. So even if I'm wrong, it's okay, because this is my first experience from 2018.
You know what? It's good to be wrong, It's
Yeah.
okay to be wrong.
Yes,
It's
yes,
not
yes.
good. It's not good to stay wrong.
Yes, definitely. You should.
That's from my
You should
friend
not. Yeah.
Ziggy. It's okay
Yeah.
to be wrong. It's not okay to stay wrong.
Yes, definitely. And
Okay.
markets are, they prove you wrong all the time. And if your mind is not flexible to adapt to what's happening, then you are dead. Literally
So
dead with your account at least.
yeah. So you were showing a regional bank chart. Are you following that action? Because you have to say that the banks and the oil shares have been, especially the oil shares, have been like not participating at all.
Yes, after you know what? When I had drawn an extension, it showed me minus 41. And
Yeah.
I never pay attention to that because negative. Who thinks about negative, right? Nobody.
I never
At
did.
max, I went was to 5. And that also I was thinking, okay, 5. It will not happen. It is oil, $5.
Yeah.
But then this thing did minus 41, and I was God. There is nothing which is not possible. Everything is possible. So
Everything can happen.
So
All right.
I,
So
I
okay. So it's really comatose right now.
yeah, it is. Nothing is happening. 41, 42, 40, 42, 40. It's just hovering around there. Maybe it will do a sudden sharp move, but as long as it's here above all of this, it's okay. Dip till here. It's doing that only. 40, 45, 40, 43, jumping around
Okay.
$2 to $3.
Do you follow any oil ETF? What is it? XLE or something? The oil shares?
Yeah,
besides
I
crude?
do XLE.
Can you show
Gush.
that XLE? And something I saw. Okay.
Yeah.
Now look
energy.
at the crude chart and look at the XLE.
I look at this.
Yeah.
So
So
this
I mean,
is
we could have a pop, but you know what? This relative weakness in the shares, to me, is a bearish message in energy because the shares lead the commodity. That's what I was taught.
okay, yeah. So this cannot get above this. So until maybe nothing will happen until October, possibly.
Okay.
So or it may do this, or it needs to come in this area and stay there. Unless and until it does that, there will be weakness or sideways until it finds a space where it has enough energy. This distance here, it's less now.
Yeah.
So it may. So that's why around October or so, if it wants to go up, we'll see price jumping up here. But till then, it'll maybe just waste time like it is doing now, or come down more and then come up and find enough energy like a trampoline to jump up. But now it is just not doing anything.
I think it's a negative signal that oil shares are not reflecting the strength in crude. I mean, even though the miners, the gold and silver stocks, did not perform as well as the bullion itself in its parabolic stage, they still went together just in different degrees. This is like night and day compared to the WTI chart you showed. Don't you think? Look at now, pull up WTI again.
This is
Do they look like a related market?
No, definitely not. It's an opposite chart, almost opposite chart.
Yeah, so I think that's a tell. We'll see if I'm right or not. I think it's a market message.
No, you should be, Dale. You have enough experience to see at least.
I've been wrong 1,000 times more than you because I've been doing
but you
it
guys
longer.
do correlate all the currencies and this and that and everything for to know what's happening in the market worldwide versus just saying, okay, this number is here, so it will do that. A lot of
I didn't notice it. I give credit to Carter Worth on CNBC. I saw him talking about it. So I do a lot of intelligence gathering to make up for my lack of intelligence. I got to gather it in from all over the place.
I know.
So that I at least, kind of sound intelligent anyway.
Yeah. So remember last time we did say that in June or in June when we talked that I do see higher for all of these stocks and the indices. and that what it happened, and they are almost closer to the numbers. Apple fired, Tesla fired, Amazon, Netflix, everything, they all fired, and they are now, I mean, at least Netflix is, I mean, last week it started firing, but it was sitting quiet, waiting for something. Tesla is gone parabolic, and you know what? It already, I completely forgot to take a snapshot before the split. I think the high, it did go over 2300, right? I cannot recall, but
I'm not sure.
yeah. So
Close.
I too forgot to take the high what it did before the split, but this was the number, and I think it did cross 2300. So you know, if you take it within 50% to 25%, so possibly this was done for now. But if it takes out higher than the next number of this, then oh my god, you're looking Tesla very, very high. But for now, I would assume it should rest.
Okay. What was your S&P target range again for the upside?
Upside 3849.
Okay.
Yeah,
All
there
right.
it
So
completes 20 cycles, because 15 was here, 3249. So until and unless we go below this, there is no real weakness in the
I'm
market.
just,
It is
you know,
just regular, you know, doing its job, relaxing, and you know.
okay.
Yeah.
Well, I hope you relax. And you were very relaxed during the interview, my Trading Warrior sisters. So the best way for people to follow you is on Twitter at Nargis007.
Yes.
Okay. You know why I remember your handle, because there's a gal who lives a life of danger. Every move she makes, everyone she meets, she stays a stranger. With every move she makes, another chance she takes. Odds are she won't live to see tomorrow. Secret agent gal, secret agent gal. They're giving you a number and taking away your name.
Thank you. You have a good voice, Dale. You
Secret agent. Secret agent man, Johnny Rivers.
Oh,
so
Johnny
Nargis, thank you. You never know what I'm going to do, right? I'm unpredictable.
I mean, that's what it makes interesting, no?
You know, well, you know, see, it helps to emotional issues. So, anyway, thank you for being here and sharing your charts.
For having me here. Yeah.
Yeah,
So,
and good luck, and I hope you and your loved ones remain in touch from that crappy virus, and that you make some good money going into the fall season.
Yeah, thank you so much, Dale. Same to you. And let's see if our meeting in the next few days results in this.
Okay. I'm looking for the throw over and then back inside. That's kind of what I'm going to.
Yeah, definitely. It's already out. Possibly, it's already out a little bit, at least tiny bit right now. Tiny bit. Yeah. Tiny bit. Yeah.
Yeah.
It's
trying
already
to break
here.
through the wall.
It's trying to do that. So yeah, next it should hit. Yeah. Okay. Thanks,
Appreciate
Dale.
it,
Have a nice day.
Nargis.
Yes.
All right. Thank you. All right, everyone. That's a wrap. And I know Nargis does this. Don't just count your pips, count your blessings. We'll see everyone tomorrow. And that's a wrap. Enjoy the rest of your day. Thanks again, Nargis. Adios. You're welcome, Monica, Alexandra, Forex Gal. See everyone tomorrow.